What's up YouTube? Dougie Chong here. Welcome to today's video where I'll be reviewing Gap stock. I'm really excited for today's video and I decided to do Gap stock because I saw an article that said Gap stock rose a staggering 40% in June alone. That's sure to turn some heads, but as always, it's important to do your due diligence and do your own research. In this video, I'll look over the business model, look over some numbers, and then say whether or not Gap stock is a buy in my opinion. Gap Inc. was founded in 1969 by Donald and Doris Fisher in San Francisco, California. It is a clothing and accessories retailer that owns brands such as Banana Republic, Old Navy, and Athleta, not to mention their flagship stores of Gap. I actually have not personally shopped at a Gap store in a long time. I don't even remember the last time I physically went into a Gap store. Old Navy is actually their best division and had $1.1 billion in revenue in 2018 compared to only about $834 million of revenue for Gap stores. It's also important to note that Old Navy announced that in February 2019 they were going to branch off from Gap and go as their own company. So if you want to just invest in Old Navy, maybe wait until the company split up and just invest in Old Navy itself. But as of right now, Old Navy is still a part of the Gap brand, and I have gone to the store several times. Their dollar flip-flop days are a pretty good deal. One thing to note about Old Navy products is that the quality is not the best. I bought 2 different pairs of casual shoes, and they have both broke within 1 year of purchasing. Their business model can be seen as pretty straightforward. They just sell clothing apparel. But in reality, the business model is appealing to specific audiences to charge certain premiums on different clothing products. This is a much harder need to satisfy as fashion sense is very subjective. I am no fashion expert myself. This shirt is actually from Old Navy, but it's clear to see that today's youth are opting not to shop at stores like Gap and are instead shopping at stores such as H&M and Uniqlo. But that brings us to the biggest reason why Gap stock shot up 40% in June, and that's that they signed a 10-year, $100 million contract with Kanye West. They will be launching a Yeezy Gap clothing line for men, women, and children. For those of you that do not know who Kanye West is, he's a pretty famous rapper who wrote songs such as Stronger. However, the most important part about the signing of Kanye West is that he already has an ultra popular shoe line known as Yeezys. I remember when I first heard of these shoes selling easily for over $500, I thought it was absolutely ridiculous. A lot of the times people would buy these shoes and not even wear them because it would lower their resale value. They would just buy them to collect them and maybe resell them later. I'll admit that the shoes are unique, but the only reason why they are so popular is the marketing done by Kanye West. If anyone else had made these shoes, they wouldn't be nearly as popular. And that is why I'm fairly certain that the Yeezy Gap clothing line will succeed, because the influence by Kanye West is just that big. He has such a big influence and following that people will just buy his products. As long as it's not absolutely hideous, people will buy apparel designed by Kanye West. Alright, now let's look at some of the numbers. Gap stock, ticker symbol GPS, currently trades at $12.28. Its 52-week low is $5.26, which was an absolutely fantastic price. I'm kind of disappointed that I didn't get it at this price, but again, no one really knew when the bottom was gonna hit. And its 52-week high was $19.86, so it's nowhere near those 52-week high levels yet. Obviously, the big price dip was because of the whole global situation going on, and still not clear when it will be over. But even before the stock was on a stagnant downward trend. The dividend yield sits at 7.9%, which would be pretty phenomenal. However, right now they're not paying it. And they do not have a PE ratio listed, which means they're probably not even profitable, which is never a good thing. However, their market cap sits at about $4.6 billion, which means they can get a lot of good prices on clothing through bulk deals. And taking a look at their balance sheet, it was actually a lot better than expected. They had about $13.6 billion in assets and only $10.3 billion in liabilities. So their assets outweigh their liabilities. If you follow my channel, you'll know that I am not a big fan of retail stocks. I think the only one I bought on this channel was Macy's, and I quickly sold it at a profit. I believe that the future of shopping will be online, which renders a lot of these retailers as expensive showrooms. But in the case of the Gap, I believe if they can survive the next year or two, that this Yeezy clothing line will be very lucrative and popular. Popular enough to save the entire Gap brand? I'm not too sure about that. But business types are often quick to underestimate the power of fashion influencers. For that reason, I would consider Gap a buy, but not quite at these levels. I'm gonna wait for it to go back to that $10 range. It is also a very risky stock because there's a chance that shopping will never return to the levels that it used to be. That's it for this video, guys. Hope you learned a lot about Gap stock. Leave a like if this video helped you at all, and don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.